backup, but I'm ready when.
Hello, ladies and gentlemen. It's IBM TV Modern Investing. My name is Sasha Star, and I would like to introduce my esteemed guest. First of all, it's Nick Poliveda. He's a founder of IBM TV Network, and Peter Bennett, who is a real professional of investing and graduate from New York University. How are you doing today? So market is very interesting. As I said on a previous show, about 2 weeks ago, there were worries about Omicron virus variant, and the market dropped one day 900 points down, and there were a few other down days. And then once it's been figured out that it's not so dangerous at all as it was feared. And the market very quickly made back all its losses. So it was 2 weeks all the way down and up. However, it's a different story on NASDAQ. Uh, Excluding really large caps like Nvidia, or even Nvidia actually went down since that day, but it recovered most of its losses. Large cap Nasdaq stocks fared well, but the smaller stocks on Nasdaq, they're still in a huge hole, and they haven't recovered. Not all their losses, but 75% of their losses have not been recovered yet. However, it's not the end of the story. We still have several trading days before New Year, and then January effect is looming, I hope. So Peter, what are your impressions about the market?
Well, first of all, you just mentioned something that was very interesting that I read it also, that everybody's saying, oh, the market's up. But if you look, there's a lot of small caps that are down, a lot of mid caps down, even some of the larger companies are down. And so you have certain companies that are dominating, especially tech, over the last year. But it isn't a broad market increase, but more than anything, this is a reflection of what's happening in the world today. And so you have the good news was Omicron. By the way, today or yesterday, they're saying now that the Pfizer's saying that if you take the third booster, you're almost totally immune, something like that. So it was an overreaction to the Omicron.
Peter, very quick question. What is your opinion? Booster means that you had first and second vaccines, and then you have booster. Now, what happens with the people who haven't done the first and second vaccine? Can they go right into booster, or they have to first vaccinate?
Well, I think the booster is considered the third shot. I believe. I'm not a medical expert.
Right. That's what I understand.
But they just mean a booster, meaning the third shot. I'm not even sure the third shot's any different than the second or the first shot. It may be.
No, it's different. It's different. The
okay, it is different. But I don't know. In the end, you're supposed to get the 3 shots. That's all.
You take 3 shots.
Right.
Yeah. Okay. First and second are about the same, but the third, the booster, it's about half dose of first and second. So what I'm trying to figure out, what are going to do unvaccinated people? So they have to go through all the procedures and get.
Well, they're supposed to.
Second, how will it work?
Yeah, they're supposed to go through 1, 2, and 3. But look, the world. This is going to continue because a lot of countries and politicians want it to continue, first of all. So, every reaction, it's an overreaction to a point. Look, if the hospitals are overflowing, I understand where they need to make mandates and everything. Now, I was going to go take a week vacation to the Cayman Islands. I've never been there. Mm-hmm. And so this just shows the overreaction. I was going to talk about this, but we canceled because, and I'll let you tell you why. Because according to the Cayman now, first of all, I have to prove to them that I am vaccinated. Then I need to take a test when flying over there. Then I have to take a test on day 2.
Right.
Then I have to take a test on day 5. I have to wear a mask outside, even on the beach. So
Right.
they have
Beach?
they have a booster.
Right.
And I've taken 3 tests in a week, but I still have to wear a mask on the beach, even though. So people talk about following the science. It's just government control and government trying to protect everybody from everything when they never can do anything. Very often government causes more problems. So this Omicron I'm not even concerned about it. In the end, COVID's going to go away. Delta just popped up a lot. I have options I've sold on them, and I bought some more when it was at 35. I sold some more at 35. I have 75 options because sooner or later, Delta people are going to fly, and there's a lot of pent-up demand. All these people not taking vacations are going to pay extra for it. The supply chain is getting better. I've heard, I don't know the exact counts, but last week I mentioned it was something like 86 ships off of LA. Now it's down to 79. So they're going to clear this up. This is not a year or 2 year problem, at least in terms of the cargo ships. But there's a lot of other problems out there for investors and for the market. That's why the market doesn't know what to do. First of all, I just heard today the S&P is now yielding a negative amount. That's the most it ever has since 1947. So you can get, whatever the yield is, 2%, whatever, 2.5%. Inflation is much higher.
Right.
And the problem then gets down to, first of all, the Fed is between a rock and a hard place. They talk, okay, they're going to taper, they're going to do this. They've moved very slowly to control inflation because they don't want to stop the stimulation of the economy because we're addicted to it. But the problem is in 2026, first of all, Medicare goes into deficit. For the rest of our lives, Medicare is going to be in gigantic deficits. So the federal government and by the way, this is a worldwide problem. All the governments around the world that I've looked at, and I've looked at Asia, Europe, South America, they all have huge unfunded liabilities to take care of their population. So the government is not going to want high interest rates, but they need to stimulate. They keep stimulating to keep the economy growing as they've done for the last 30 years. So it's going to get very tough because of inflation, and the Fed can't really do anything. So they'll talk it up, whatever. But if you look at the 30-year, it's very low. I forgot if it's like 1.7%. So the market is not buying into this. The 10 years at 1.5. So if they really believed in inflation, then or that rates were going to go up, I should say, they would be willing to say, okay, I'm not taking 1.7 or 1.5. But a lot of people are. The reality is the more rates won't go up that much because it would crush the economy, and the government can't afford it anyway, as all the other governments. So they're between a rock and a hard place, which gets the investors into between a rock and a hard place. And the other thing I want to talk about is energy. I really want to focus on this again because I think we're just at the beginning. I've been talking about that on the show for 6 months now, whatever. We are in the beginning of a huge energy, either crisis or mini crisis. It could be a huge crisis. I've been saying for weeks now, this was what really alerted to me. When the USAC report, I have about a 4.5% maybe position in there. They said that the oil companies are under-investing by 40% on CapEx just to keep oil level, or energy level. I don't know which they were saying. Now, let me read you these 2 things that goes along with it. First of all, Exxon has already aired some of the initiatives. It says, okay, they plan to spend 20 to 25 billion a year in CapEx through 27, but they had been spending 30 to 35 billion. So they just went to 20 to 25 billion. And they expect to spend 15 billion on through 2027. So that's divided on low carbon businesses. So that won't even be oil. So they're not only reducing their budgets for CapEx exploration and production, but they're also saying that they're going to spend some of that money on solar or whatever, or reducing carbon. So that means less oil in the future. That's through 2027. And then this one really sums it up. And then I'll let you guys go, but ConocoPhillips CEO, he was just at a meeting. This is yesterday's article. It says he's talking to an energy conference. He says government pressure on energy producers to halt investments in new oil and gas and coal production and new questions about OPEC's spare capacity are setting up for, quote, a messy transition. And he goes on to say the transition could be unsteady and likely will leave some new energy products starved at capex and unlikely to proceed. It says Pioneer Natural Resources Scott Sheffield says he worries oil prices could get high above $100, and he hopes it settles at 80 to 100. And then the Conoco guy says he expects volatility. What he really is saying high prices, but he doesn't want to threaten anybody. So, I mean, and oil prices or energy prices in general are going to go into the inflation factor. So now we're going to probably have a problem with energy for a long, long time.
Yeah. Actually, I remember I sold Enbridge around $42 level, but now it's below 40. It's actually 38 something today. So I bought back my position in.
Yeah, you have to be careful about that because I was almost sent you an article today I saw about Enbridge. They're having a big issue with, I think it's called their main line. I didn't read that much because I don't have Enbridge. I have other MPLX and other energies, but they're having a problem with their main line where they on the time frame of contracts. I'll send you the article, but it could affect 30% of their revenue. They did increase their dividend, by the way, I think yesterday. So, it's not a bad company. I think it's roughly 50-50 oil gas. I don't know, but I like ones that are like 80% gas, 90% gas. As a matter of fact, I sold out of TRP because it was so high, and it only had a 5.5% dividend, and roughly. And they said themselves that they're now expecting 3 to 4% growth in the dividend, which is still pretty good. I mean, where do you get a 5% dividend with 3 to 4% growth? Except for when you compare it to an MPLX that's paying 9.5% dividend and or USAC that's 16. But I think the MPLX will keep growing. They just increased their dividend. So, but TRP is like now they're going to grow slower because they're spending money on carbon sequestration because so everything costs money, and whether there's trade-offs here, but people are not going to be happy with the energy prices, and it's politically going to have probably big impacts down the road.
Now, speaking about Enbridge, I believe that the stock price reflects the problems that it encounters elsewhere. Because if wouldn't be for this problem, I think it would be 45.
Oh, that's true. You're right. But you see, I'm so risk averse. I don't like the Line 5 controversy. Now this mainline controversy. It's like, why do I need that when well, I hate to pick MPLX again, but that's the one I feel safest about. I mean, I only have a few investments I really feel safe about, and MPLX, and that's it. Maybe I'm wrong, but and as a matter of fact, I reduced MPLX from 25% to 22% today because it's just you can't have that much in one stock.
Right.
But MPLX is, you've got, it's a utility. People need natural gas. It's mostly natural gas. I won't go into it because I've talked about it so many times. People can read about it. But I'm just saying I don't like. Why would I need an Enbridge when I get even a TRP where I don't think there's these issues where it could go either way? And if it goes your way, you're going to make a lot of money because it would go to where it was. But I don't want to flip any coins at this point. So I'd rather have I take my risk with USAC, let me put it that way, which has a yield of about 15 or 16%. And as long as, and there's a lot, we could discuss that later, but it might be able to keep that yield for the rest of time. So, if there's no major issues on their debt covenants.
USAC will keep yield for a long time, Peter?
No, they're yielding about 60. Oh, if you wanted me to discuss it a second.
Yeah, because the thing is, I have all those ones you're discussing. I have USAC, I have MPLX, and I also have Enbridge. And I did see the yields, and that's part of the reason when I was going through my portfolio, I was figuring out what I'm going to prune away. In other words, what I'm going to clip away. And I go, I'm going to keep all of them because I go, well, At worst, you get dividends, and if they go down, as long as you get dividends. The only problem I have with MPLX, which everybody should have, is the black swan effect. It's like the fire eye effect that I experienced earlier this year.
What's that?
Something is internally wrong that you don't know about. Remember Enron? Most people here do remember Enron, but a lot of people that are listening don't remember Enron. I remember Enron and MCI because I had clients that were in Enron and MCI.
Yeah, you never know. You never know.
Well, the thing is, I'll tell you what they did. They bet so heavy. One guy had 30 million in Enron. I'm going like, dude, have you ever heard diversification? I've made so much money off of Enron. What could go wrong? Go wrong.
Right.
Go wrong.
No, of course. Yeah.
And
That's why I brought down to 22%. And
Okay.
I have, by the way, I protected the 22 with options that are much lower just because I don't want to lose 22.
But these are true stories. I had another client had 16 million in MCI WorldCom. And I said,
zero.
I said, dude, I said, do you have any other securities? Because I was doing their estate planning back then. Any other securities? Nope. I said, aren't you concentrated too much on one stock? Nick, I made millions off of MCI WorldCom. I'm broke. Literally, both these people are living on.
Yeah, that's why you need diversification. And,
very good.
And that's why 22% is a big bet. But again, I protect some of that with options at much lower prices.
Right.
But you know what? Let me discuss USAC because I brought it up and you have it. So.
I like USAC.
I like it too, but I'm about 4.5%, and this is why.
Okay.
So they've been a steady Eddie dividend. They make motors that push the natural gas through. What could be better? You know, it's great in the United States, no less.
Yeah.
So they're pushing the gas through the pipelines. They're covering their dividend, but it's very tight, and they have debt covenants with banks. So it's possible it could go either way. But I looked at the conference call. They're saying they're going to have good quarters and keep as long as they keep this cash flow or more, they won't violate anything, and I think they will. But let's say they might have to reduce their dividend a few percent. But a lot of times I see companies that reduce their dividend by a bit, especially a super high one, then actually go up. So I'm not overly worried about it, but if I didn't have this debt covenant issue, I'd be like much more in USAC because you get your money back so fast. You know, depending on, you have to, you know, there's different ways to hold it, but it's an MLP, so you have certain tax aspects, but there's a lot of MLP advantages. There's some accounting costs, but so it's probably going to keep its dividend, and it's worth the gamble because even if it didn't, even if it cut it in half, we're going to get 7 or 8% saved.
Sure,
because if we cut its dividend, it would easily be covering the 8. So I like it for the long run because I like the model, and so. But of those three, Enbridge could go either way. That's why if you were going to pair energy, that's what I would say.
Well, I would like to notice that not every diversification is really good. Not all of them are equal. If somebody would diversify and have Enron and WorldCom and Nortel.
Right.
So now you're diversified, but you're being killed.
Yeah, you diversified into the wrong sector, the wrong.
Absolutely.
Right. And the more you diversify, the more you get the market average.
That's right. You average out.
Unless you're really good picking.
Right. You average out, which is a real problem, and you don't want to do that. Now, I did load up earlier on Pfizer. I had bought it, sold it. And then I rebought it again. It was like it's a weird relationship. And I reloaded up on it because at first I bought it because I go, COVID's going to be big, and I made a big profit. I go, okay, I'm out. This is like in the summertime.
Are you out now?
No, I'm back in. I was back in the fall because I was going, COVID isn't solved. In other words, and they are the leaders in the the industry. So it's like you're buying the Alabama or you're buying the Tampa Bay Buccaneers as the winner. You're just buying a winner.
Yeah, it's a good company.
What I'm doing is I'm going like, okay, I'll go ahead and stay with Pfizer. I felt bad because how you do wash sales, because I'm going to do some wash sales at the end of the year. I felt like I did the wrong wash sale. I took all the capital gains that I don't need, and then I rebought the stock. I was going, why did I just hold it? You said, it was stupid. No,
now you can pay the taxes.
I know, that's what I'm saying. All I did is created taxable income, which I don't need for me. And I was going, this is stupid. But the reason I rebought, Peter, is I thought, you know what? This thing is not going to go away. In other words, COVID maybe with us. Next year, we're going to be talking about it. It just doesn't look at, and you're going to need some. I also bought into Bristol Myers Squibb. BMY, put a big bet on them for this reason. Their stock, go look at it. It's taken a big hit based on this new bill in Congress to regulate pharmaceutical drugs.
That's what I was going to mention about Pfizer. That's what makes me nervous. Again,
and that makes nervous. My bet is, and this bet may or may not work out, is that this big bill is not going to get passed. This new $1.8 trillion bill, and it's tagged onto the bill.
Probably won't.
If it doesn't get passed, then watch BMY rebound, because they were off. They're off like
part
11%.
Of it might. Who knows? Maybe they'll have a smaller version and they'll hit the.
Yeah, and the real challenge
again,
the risk is they carve out the bill. They carve it out.
That's what I'm saying.
And then all of a sudden they
or they pass a little bill. Maybe Manchin and some people say, okay, we'll just do a $500 billion more of stuff I like, but we'll add the taxes in.
Yeah.
And you know what? They'll destroy.
Political speculation. Let's take a few seconds break, and then we'll continue about Pfizer and others high yielding stocks.
Okay, all right, we'll do a commercial.
Well, this Saturday we are going to talk about this World Championship in chess, and the contender Nepomniachtchi. You can compare it to stocks like Enron, and
he's a bad stock.
Oh my God! If people put some wagers on Nepomniachtchi, they took.
I know they still do wagers in Las Vegas, but his odds must be tremendous against right now, because he's down three points in the match, and the match is almost basically it's over.
I think he gave up. There will be 2 more draws.
Yeah, that's what I figured. It's over. And are they going to be over with on Saturday or not?
Yeah, I believe that. Tomorrow they have a day off, and then Friday and Saturday there will be 2 more games, 2 draws, and the match is over. So,
all right, well, let's get back to finance here.
Yeah, well, chess and finance are the same.
We all like chess, but that's not the show.
well, the thing is, aren't you doing the same thing? You're just taking positions, Peter, and trying to analyze the market.
It's absolutely analytical skills, and in a way, I almost view it more like poker in a way, because. But it's a combination. It's sort of halfway to both, because there's more skill in it than poker in terms of analyzing. In other words, you can get more analysis than a card game. You have to sort of guess in a card game. Like if you're 60-40, you're really good. And although they say that same thing in stocks, but I feel you can do deeper analysis. But the other side is you put your bets up. Okay, this is my bet, and you could lose the whole thing, or you could double it, or So it's a lot like these games. It's all analysis and everything.
I think stocks are much closer to chess than poker, because in chess you see everything on the board. So you and your opponent seeing exactly the same thing. In poker, you have to.
Yeah, I agree with you, Sasha. I think it's closer to chess, but you're still putting down the money.
Play with this one, okay? Because I ran polls on LinkedIn, and by the way, we are broadcasting through LinkedIn, Facebook, Twitter, Twitch, and YouTube right now live. Okay. And so I put polls on them, and I said, what's the best stock? I put a bunch of stocks up there that you should speculate on in 2022. The big votes came in for Tesla. And I'm sitting there going, I honestly, I did some research on Elon Musk, some of the bad stuff of Musk. He gets the best media coverage in the world, because this guy's done a lot of bad stuff. but and when I'm saying it to investors, et cetera, and the way he operates, like he puts
He's been
these.
selling a lot of shares, and
I
that's
know
not a
that. I
good
know
sign.
the guy's a great salesman, but he puts his
Yeah,
factories in Shanghai. He sucks up to the Chinese. He brings the things back here. The guy is unbelievable. He's a grandmaster of
right.
destroying countries. In other words, basically playing countries against each other
Well, he
and
moved from
not being caught.
California to Texas, by the way, is
Oh yeah, that
plan.
was another move. Okay, but see, this is what I'm
So
saying. We
that's
should
a
do
good move, right?
okay.
So,
It was a good move for him. Okay,
yeah,
we should do a whole special on Elon Musk. Seriously, this
you
and
could do it. Yeah, for sure.
because he certainly run several polls on Tesla, and Tesla becomes like this savior of the world stock. So now the thing is, we know that Elon Musk is the true savior of the world. He operates in China, and he operates in China, the United States, and he moved his operation to Texas, so he didn't have to pay taxes. What do you think about Tesla stock today? It on LinkedIn was the number one stock in my poll.
Well, to me,
Peter, yeah.
go ahead, Sasha, if you want.
Okay, no, Tesla is probably only one out of all big stocks that I never touched, either options or stock itself or so on, because there are a lot of things that I can't comprehend. For example, 5 years ago, okay, you may say that Tesla is the only game in town. There is no competition and so on. But today, even China has several. Electric vehicle companies.
Right.
In fact, I like NIO for other things. Maybe NIO is a poor man's Tesla in a way, but I like that company. It's stock doing quite well, and I'm trading NIO, and actually I have now quite a few shares of NIO with covered calls sold against it or so on. But now companies, the mainstream companies like Ford, like Mercedes, BMW, they all have. I looked at the latest Mercedes electric vehicle. It's
Exactly.
state of the art vehicle. Look at Ford. They're
Well,
doing.
VW, particularly, Sasha,
Yeah,
VW had projections. I was saying this 6 months ago. Their projections were that in 3 years they're going to be selling more EVs than Tesla. But the value of Tesla is so inflated, like they're the dominant player, and they were the leader. So sometimes the leader keeps the lead, but it's very risky. 2 points about that. One is interesting. Like today, I was reading an article that Elon Musk has 6 kids, and I thought this was interesting. And he is arguing that people think that the world is that overpopulation is a problem, but he actually believes underpopulation is going to be the problem. But so he comes up with these theories. I don't agree with that probably, but and his support of Bitcoin, I mean, which I want to talk about right now because it's some interesting thing. I did deeper research into that new legislation. So, but the way he supported Bitcoin, then he didn't, and he was like, he's a genius, but he's a bit of a. You might even admit he's a little flaky.
but
But
right
Yeah.
now he's not accepting bitcoins for Tesla cars.
well, now he isn't, but then he was. But then he was. It's like
But
wait. But my point was he was talking about like I was talking on the show for a long time about how much energy Bitcoin was using, because it was using a huge percentage of energy, and it's ridiculous how much energy it uses for the mining. Well, months and months later, Elon Musk discovers this. While he's been touting Bitcoin all along, and then he figures out, oh wait, this isn't good for the environment. This is months and months, if not years, after he's supporting Bitcoin. But here's my interesting point about Bitcoin, and crypto. So I looked at the actual legislation that was already in the infrastructure bill, and in the infrastructure bill, it says starting in 2023, this was what I was looking for, companies have all Bitcoin providers have to, exchanges, providers, everybody has to report Bitcoin transactions. So in 2023, that means people are going to be shocked because now not only, and there's issues with this too. So if you make $1 on a Bitcoin transaction, it's going to be reported to the IRS. So one, you lose your secrecy. Two, you can't use it for, take a hostage or something like that. Three, now it's a reporting nightmare because a lot of these exchanges list the actual amount of the basis, how much you invested, as the original amount, even if it's been transacted. So you have to keep your records. So comes 2023, I would not be surprised if this thing blows totally up and is gone. So it's got 1 year to go because a lot of people don't seem to be paying attention to this.
But you know, Peter, there's a lot of companies that are producing Bitcoin. Most of the Bitcoin is worthless, by the way. There's only one of them that makes a lot of money. The rest of them are
You mean
look at it.
crypto? You mean crypto, not Bitcoin?
Cryptocurrency, excuse me, cryptocurrency.
Yeah,
There's
no,
a lot
I've said on the show, there is now 7,000 different cryptos out there.
exactly, and most of them
And they
are
keep doubling every year. But
Yes.
this is why the governments are going to stop it too. You
Yes,
can't have
and the
just private
cryptocurrency.
people producing money.
Yeah, but a lot of people are producing money off of cryptocurrency by selling the dream of cryptocurrency.
Oh yeah,
Okay,
it's
almost it's almost like
tulips in Holland or Beanie
Yeah,
Babies or
yeah,
it's
exactly.
going on and
Beanie
on.
Babies. There we go. In other
Or
words,
Madoff or whatever.
right.
Look,
Well,
I can't promise because
Yeah.
Paulson says crypto's a scarce amount of nothing. And that's what I view it as. So it could go to $1 million because it has no fundamental value. But I think that it's got a 1 year timer on it. I think
really?
that,
You think
and it's already going down, and people are explaining it in different ways. But it was like at 49 or 50 now. But I think as people start looking at this, saying, "Wait a minute." Once we start reporting every transaction, once it's a tax nightmare, the government is going to succeed in what they needed to do anyway, and the United States is going to wipe out crypto probably, except for they're going to have a digital currency, and that'll take over. So, digital is fine, but Bitcoin probably has a year to go, and during the year, more and more people are going to be, okay, I'm out of there. So it's very, very speculative.
I'm going to predate most of our viewers, by the way, by doing this.
Yeah.
A lot of people have not seen this. This is a book by Wade Cook called The Wall Street Money Machine. All right. And what he did, he hyped up, you can make a lot. He started selling educational stuff, including this book. Obviously, I bought it. But seminars and stuff like that, how you can make money in Wall Street. It's a money machine. I'll show you how to do it. Now that he's out of jail, wait a minute, maybe he's not out of jail yet. Okay. For basically just promoting a fraud in terms of his education programs. This is where I see Bitcoin. But here's the problem. Most people of this generation never went through the Wade Cooks of the world, and they've never went through the Enrons. They've never gone through the MCI WorldComs. They haven't gone through what I'm seeing right now in the era of cryptocurrency. A lot of people, you can make all this money here. I'll show you how to do it. I'll show you how to do it. My fee is $2,000, but look at all the money you can make. And I go and do my own analysis. I'm going, there's only one of them, cryptocurrency, that's made any money. And I'm not sure if the values are there.
Well, that's not true. There's a lot of cryptocurrencies that went up. I mean, Ethereum went up, but there was one that went up 300,000%. It went up from something to 2,000 something, and then it went to a quarter cent within a week. So these things have look. It's probably gonna blow up by 2023. People are gonna hate this once they have to report it.
You see this guy, the intelligent investor. All right, now that is written by a guy named Graham. This is the book that Bill Gates and Warren Buffett read. If you read through this book, you'd go, "I'm not investing in cryptocurrency," and you put the book down. I mean, the thing is, it's almost like I'm out. And it's same with Tesla for the same reason. I go, I don't invest in things because you're not really investing; you're speculating. Now, if you have money to gamble, go ahead. But the thing is, it's not. And true investors just won't go there. But Tesla is now on they made it to the Dow, and so unfortunately they're included.
S&P 500.
S&P, excuse me, they're included in the S&P index. So I own Tesla. Not because I want to, but it's because my index funds own Tesla because they have.
You know what? That bridges into what my dividend stock of the day, which is it's a fund, and it's I wanted to cover this. I have 9% of my assets in RHS, which is the Invesco Equal Weight Consumer Staples ETF. So I don't want to own Tesla. And maybe my worldview is right, maybe it's wrong, but I view energy as a huge problem down the road, and other inflation, and it's hard to earn income. So, if that's the case, and I'm reasonably right, and also as just a balance in my portfolio, I love RHS because it's got roughly 33 staples. So we're talking about P&G, Costco, General Motors, Smuckers, and Pepsi, Constellation Brands, and they adjust. They seem to make a nice little tweaks here or there. They do a good job. But what I like about it, first of all, is equal weight. When you buy the S&P, you're buying and I like tech, but you're buying a ton of tech. You don't even know what you're getting, and you're getting financial companies. You're getting real estate, which I hate. I like certain REITs, but I hate office REITs, and I don't want to touch them. And I think the banks may be hurt by them, by the trend towards video conferencing, and because there's huge amounts of offices. Last I looked, 25% occupancy rate in New York City. Somebody's going to pay for that down the road. So I want to be selective and avoid risk. So what I like about this is I view it's got a 2.26% yield as of today. So it's not a great yield, but the price to cash flow is 14. So price over cash flow. So it's really earning about 5.5%. Its cash flow growth, according to E-Trade, is 15%. So these are companies that, even if there's inflation, Pepsi, Coke, and Costco are going to raise their prices a few cents each month or each year, and keep up with it. These are necessities. They're safe. So, I don't want to take no risk, so I wouldn't put everything in there. And I've now up to 50%, unfortunately, fixed, counting a lot of cash because I can't find places to put money. I'm actually over 50% because I have about 15% in cash now. I can't help it. I just can't find good things because the market's so high and the yields are so low now, and everything seems overvalued and there's a lot of risk. But what's great about this is I feel, and by the way, I put most of it in my Roth IRA because it seems like one of the safest things I could possibly have. Look, even if they do badly, it's not going to zero. Maybe the 9% will go down to 8 or 7% if there's too much inflation. But more likely, it'll just gradually go up over the next 10, 20, 30 years. And it's just a nice base. It's like a core holding. So I love it. I like Invesco generally, their funds, although that's the main one only one I have right now. But I like consumer staples as as part of a core base along with fixed income.
Right, and you eliminate all the risky stuff like Tesla and some others.
Exactly.
Now, interesting observation about high-yielding dividend stocks. That with all this turmoil in the market in the last 2 weeks, they really didn't go down. I was watching over like Altria, like British American tobacco stocks, and
people are desperate
but then why would dividend stocks go down,
they
Sasha?
didn't.
I mean, but why would they? In other words, like we sell a lot of what they call SPIAs, single premium immediate annuities, okay, and we sell a lot of annuities in our pension plans. It's just a fixed income that comes out, and you don't really look at the investment because you're just looking at what comes out. If you looked at it from that standpoint, like MPLX or any of these, as long as they pay a dividend, who cares? Almost who cares what the value is?
As long as it's safe, that's right. You're buying into a business and a cash flow.
You're buying into business and cash flow. And so the thing is, the dividend stocks, I think, are the fundamentals of anybody's portfolio, that you should have a group of good quality dividend stocks. I did buy into IBM. It was low because it had you saw that it has a 5% dividend right now.
I know we don't have time for that, but I did research for you on IBM.
IBM. Well, maybe on the next show.
It's very mixed. There's a lot of uncertainty, but maybe next show we could talk about that one. But it's very mixed. I mean, it's uncertain because there's even their earnings forecast. I'll read you this, but they're not forecasting earnings right now. And they have a mixed track record, but we don't have time for that. But and not only that, but dividend stocks have outperformed, especially dividend growth stocks have outperformed the market over almost any amount of time. And the other point is, look, I like some risk, but I want to pick my tech companies, and I want to pick my oil companies if I'm going to take the risk, in selected areas. But as a base, dividend stocks are what could beat it. You can't. They're doing the work and you're getting paid for it.
Yeah, actually correct. Actually, a very interesting thing about Pfizer. I bought it when it was like $35 a share. I bought it as a high-yielding stock. It was paying well over 5% dividend, and a well-run company and so on. Now I still own it, but it doesn't pay high-yield dividend.
What does it pay now?
3%.
Yeah, I know. That's the problem with the market right now. It's like,
Yeah.
and you know what? This is what I wrestle with. I say, okay, here's a good. I'll give you a perfect example. I own, I think CPT. It's an apartment REIT, and it used to pay 3.5 or something like that. So it appreciated a lot. Now it's paying 2. And I go, wait a minute. Over the next 20 years, how long is it going to be till I get my money back? If it, at 2% with, if there's no major growth, but I'm hoping for some growth there. But I'm just saying that's 50 years to get your money back. Why bother?
Well,
But I think it'll grow a little. It could grow because it's apartment REITs in
well, with
the South.
with
But I'm just saying,
Pfizer, I'm pretty sure that one of two things will happen, or maybe both.
what's that?
They will start buying back their shares,
Oh, yeah.
and or they will increase their dividends.
Right.
And I
Well, I
think
hope the
that's
Democrats don't pass
Yeah.
this rule. You know what? I want to mention this about this. What's the problem with this rule? If they do this, if they squeeze the cash flow of these drug companies, which it'll really crush the pharmaceutical industry by taxing them much more or putting in other rules where they can't make as much, maybe from Medicare. And I could see the simple logic for it, but they won't do the research and development anymore. And you know what? We develop most of the world's drugs, and the world actually gets subsidized that way, by development. But these companies cure diseases, and they need money to do it, and it's very expensive. It costs $1 billion or whatever, $1.5 billion to develop a drug, and then they want to put in rules. Oh, you can't keep the patents as long, or you can't make the profits. It's like, then they'll just say, do what the energy companies are doing and say, okay, we'll do something else with the money, like pay it back to the dividend holders, and we won't invest in much, or we'll only invest in the best projects, which is what energy companies are doing.
Right.
And then so you get less energy, and then you get less drugs. So there's trade-offs to a lot of things in life.
Yeah, well, we're living in a very interesting time, and I hope next week will be productive and profitable for all of us. And now I would like to thank you very much for participating in the program. All the best to you. And it was IBM TV Modern Investing. Thank you very much. We'll see you next Wednesday. Bye-bye.